So let's go to Tim Craighead, Bloomberg Intelligence Research Director for Content. They do great pieces where they put out like top 10 companies to watch, top 20 companies to watch for the quarter, for the month, for the year. And they're out with their 10 companies to watch for the second quarter. Tim, give me the broad scope here. What are you guys looking at?
So just as a reminder, these are all based off of focus ideas, which for us in Bloomberg Intelligence are high conviction, out of consensus views where we see catalysts ahead that can actually change the market's mindset around these companies. So I think, it probably makes sense to jump in on the idea of tariffs. Are there any of these 10 that coalesce around this hot topic? And there are. No big surprise. You've talked about the weight on consumer sentiment and things along those lines. Well, Dollarama, which is a dollar store up in Canada, has... Yeah, exactly. They're going to face slower wage growth, higher inflation. We've not seen estimate cuts yet for Dollarama like we've seen with Dollar Tree, dollar stores and whatnot. We think that's coming. Another one that is interesting, if you want to throw on as well, the whole tariff concept is PDD. You might not have heard of this, but this is one of the big Chinese companies that tech companies that trades in New York. They own Temu, which is that ultra low priced e-commerce platform in the States. There's even, their bigger platform is one in China. They're going to have constraints on what they can bring in at the right price. And they're also investing pretty heavily outside the U.S. to grow their non-U.S. platform beyond China. So again, we think that there's estimate cuts there to come.
Hey, Tim, looking at this list, one of the more controversial calls I think, is Tesla. Steve Mann, you're the analyst for Bloomberg Intelligence covering the auto business. He's pretty positive on Tesla here, despite the collapsing stock price and I guess the concern about Elon Musk and his focus.
Yeah, you could throw this in with tariffs, with policy, et cetera, and clearly it's taken a shellacking from a stock price perspective. We see two things going on here. Number one, there's been a lot of talk about how their sales have been disappointing as of late, and is that because of politics? We think, frankly, it's because of the model transition with the new Model Y coming out. Orders, even in China, have been good, and we would expect to see sales to pick up as we proceed through the second quarter and on into mid-year. You've also got a really underappreciated battery storage business that is also starting to ramp up. So we see two catalysts here to play out that people aren't focused on because of all the other noise.
And here's one for Paul here. Cracker Barrel.
Oh, yeah.
Is on your list. Again, I've never been.
See, now, Tim, while he lives in London.
How could you not go to Cracker Barrel?
I grew up in New York City, man. Like, I don't know what I'm going to do.
See, Tim grew up in Southwest Virginia. He knows about biscuits and gravy.
I mean, I'll eat it if you buy it and eat it. I mean, give it to me. I'll eat it. Let's put it that way. All right, talk to us about that.
It's really good.
I've heard.
Cracker Barrel falls into the restructuring, reorganization bucket. And there's another one on the list as well that actually may be good for you, Alex. I'll come back to. But Cracker Barrel, 3 years of estimate cuts. There's next to no buys on this stock. And from an underlying business perspective, they've made some wholesale revamps. The menu, their approach to service, they're remodeling stores, and we think that there's an inflection to come from the standpoint of earnings trends. Notwithstanding the economy, this one's already been beaten down, and we think that there's an upside to come. Caring's the other one. Now, Caring, yeah, so again, 3 years of estimate cuts. Yep. You think, who is Caring? Well, their biggest label is Gucci. There you go, Alex.
I see. And I only shop discount, Tim. Let's be clear.
Yeah. Go ahead. So, new CEO at Gucci, a new head designer at Gucci. We think there's a rejuvenation at hand, and it's not in the estimates.
So, again, Tim, let's just step back a little bit. European markets really performed well, certainly relative to the U.S. market. What are your clients saying here?
So, I think there are a couple of things coalescing. three, in fact. You take tariffs and all the concern that's going on. You take DeepSeek and that raising the specter of, gee, is there a different dynamic in the world of tech that's been driving U.S. markets and U.S. exceptionalism? And then you have a big European defense initiative and imperative with Germany coming out with what people around here are calling the bazooka. And you add these together, there's a growth idea developing in Europe. There's concern about what's going on in the U.S. And if you look at our economists, they see as much of a hit on U.S. growth and inflation as they see it anywhere outside of Mexico and Canada. So all of that weighs on the U.S. and Europe is an alternative. And obviously we've talked a lot about how it's valued relative to the States. I think that creates a money flow issue, a money flow opportunity, just like it does for China.
All right. Good stuff. We wanted to get your opinion there. Tim Craighead, thanks so much for joining us. Tim Craighead is a Global Chief Content Officer for Bloomberg Intelligence. He's based over there in London.